I'm here with Jim Rogers here in Singapore. Jim, thanks so much for joining me today.
The American market went up for over 10 years, which is it never happened before without a setback. So America has set a new record on the upside. It was certainly overdue for something to go wrong. The debt got stretched higher and higher and higher, not just in the U.S. but all over the world. But let's more or less focus on the U.S. Because that makes it simple, and the U.S. is the biggest. The debt went skyrocketing because the Federal Reserve was just kept printing money and flooding the world with money, as did other central banks. So the world was ready, as you know, you and I have discussed. I told you we were going to have another bear market someday, another problem someday, and it was going to be the worst in my lifetime. I didn't know about the virus, but I certainly knew the conditions were fraught. The debt was unbelievable. We had a huge problem in 2008 because of debt. What, by 2009, 10, or sorry, 19, 20, the debt was staggering, staggering. So we had to have a serious problem, whatever caused the problem. Kim, I know you're aware there's an election in November in the United States. It's less than 6 months away. These guys don't care about you or me or your readers or your kids or my kids, or certainly not young people. They care about the election. That's all they're thinking about right now. The debt. Before this, the United States was the largest debtor nation in the history of the world. Oh my gosh. Since then, just in the last 2 or 3 months, the debts have skyrocketed. It's going to continue. Someday, somebody's going to have to sit around and say, well, wait a minute, what do we do next? What happens now? I would suspect the markets will continue to be fairly strong. The U.S. just made its all-time high because there's so much money being printed and there's so much money being spent. It's got to go somewhere. I don't think it's going to be a lot of fun, but it is going to end, I assure you. The market's just going to say, okay, we've seen this movie before. We're not going to play this game anymore, but that doesn't preclude a bubble. That doesn't preclude a blow off. Markets frequently have blow offs after a long period of rising. I have no idea. I'm not any good at market timing or short-term trading or setting trends like that. But I have seen throughout history, after markets go up for a while, they frequently have a bubble. And all the ingredients are in place right now for a bubble. And bubbles always end finally when somebody says, no, somebody, all the smart old guys get out. All the smart young guys stay and make a lot more money. But then even the smart young guys say, wait a minute, we got to stop this. Young women too, young old women too. That's the way that's the way most bubbles end. As I look around the world, bonds are certainly not cheap. Bonds have never in world history been this expensive. So bonds are a bubble. That doesn't mean they can't go higher, but bonds are certainly not cheap at any measure or any historical time. Stocks in the US are making all-time highs. Well, that's probably not cheap at an all-time high. It doesn't mean they can't go a lot higher. Japan stocks are down 60, 40 or 50% from their all-time high. Doesn't make them cheap, but it's cheaper than being at an all-time high. China stocks are down 40 or 50%. I told you about Japanese, about ETFs actually, because that's what the old man running the bank likes to buy. So Chinese shares I bought there, Russian shares. I mean, everybody hates Russia. There's still things that may be cheap going forward. I bought Russian government bonds in rubles recently. Nobody likes Russia. Nobody likes rubles, but bonds and short-term bonds, especially, are very high yielding right now. The ruble collapsed, so there are things that might present opportunities, as you know. Anything to do with travel has been smashed. I bought a Russian shipping company recently because everything, airlines, restaurants, hotels, they're empty. You and I live in Singapore. Well, the Singapore airport is closed, essentially. So all these things are, nobody's paying any attention. But Kim, I do know we are going to continue to fly someday. We're not all going to take the bus around around Europe, around America. We're not going to all take the boat to London in the future. I do know that airplanes will come back. I do know that things can do having to do with travel and the world will come back someday. Listen, Kim, if somebody's watching this and they can't find Russia on a map, please do not go buy Russian shipping stocks. If you don't know how to buy Russian shipping, don't buy Russian shipping because some guy you saw on the internet said he's buying Russian shipping. If you look at commodities, commodities are certainly probably the cheapest asset class around right now because they've been going down for a while. Doesn't mean it's the bottom, doesn't mean you should buy them. But if you look at any historic basis, I mean, sugar is down 80% from its all-time high. Bonds are making all-time highs, the highest they've been in world history. Sugar's down 80%. So commodities, just looking around the world at asset classes, commodities are certainly the cheapest. I guess the farmland in some countries is very cheap because it's been such a disaster for so long. If you go to Japan, they'll give you farmland because nobody wants to be a farmer. The problem is who's going to farm it, and that's why it's so cheap because the average age of farmers in Japan is 66. They give you a farm if you show up, but then unless you know how to farm, you're going to be in trouble like everybody else. Who's going to farm? I got this cheap farm. What am I going to do with it? I still expect China to be the next great country in the world. I don't see any other country on the horizon. As we have discussed, the 19th century was the century of the UK. The 20th century was the century of the US. 20th is going to be the century of China, whether we like it or not. A lot of people don't like it. If you want to succeed, put all of your eggs in one basket. It's got to be the right basket, and you better watch that basket very, very closely. But that's how you succeed. You don't get rich diversifying. I understand the story, but most people who are investing are there to get rich. They want a hot tip and they want to get rich this week, which is horrible, a horrible way to invest, but that's the reality. Unfortunately, that's the reality. I, of course, say don't do that, don't do that, don't do that at all. Don't listen to me, don't listen to other people. Stay with what you know and don't diversify. My advice is do it. It's extremely educational, it's extremely fun, but better be sure you mean it because it's not easy. It looks easy. Oh, yeah, I get on my motorcycle and drive around the world. Anybody can do that. Get in my car and drive around. It's not easy. Many people, not many try because it is hard to even try. Many get killed, many go home, many have accidents or injuries or whatever. So do not even think about it unless it's a deep passion. It's like starting a business. Do not even think about it unless it's a deep passion because these things are not nearly as easy as they look. But if it's your passion, I'll tell you, there's nothing better. You cannot get a better education. You cannot learn more about yourself. And and back to what we were talking about earlier, we need to find out about ourselves first. Good way to find out about the world. No, there's nothing quite like it. It's magic, but it ain't easy. You might very well get killed. So be careful. Go wash your hands.
Right. Take care.
Bye bye. Bye bye.